This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we've seen a lot of pressure coming into the market here over the past several sessions as the selling kind of feeds on itself. Yesterday, we had that December corn contract bump up against that pivot point that we've been talking about for the past couple of weeks. Previous support, 447 to 450, became resistance. Weren't able to chew through that, and the sellers took advantage. We saw some better weather come into play for areas that were expected to be hot and dry, but that rain is not going to put several million acres back in the ground. So we still think that the longer term picture has a pretty sturdy fundamental backdrop, and at these low prices towards the low end of the range over the past couple of months, I think it represents pretty good value. 430 is a little bit of a pivot point. This represents a key retracement, the 50-day moving average, as well as previously important price points. If we close below there, we could go retest and try to fill that gap from May 28th, a little closer towards 418 to 420. But again, at these lower end of the range price levels, I think there's opportunity to the upside. Now, looking at the soybean market, they have been the big surprise of the day. We were not looking for such a strong relief recovery rally from beans. We tested support 890 to 892, which represents a key retracement, 50-day moving average, and support from July 9th. That held, and the bulls needed to defend that. If we were to close down below there, that would have accelerated the selling pressure and taken us down towards the 860. So $9 now becomes the pivot point. If we stabilize above here, potentially there's more upside to this market. I'm a little skeptical, so more of a neutral bias here in soybeans for the moment. Now, wrapping things up with the wheat, our bias has been outright bearish for about a week and a half now. $5 is a big level to wrap up the week. If we close below here, wouldn't be surprised to see sellers step in and take that September Chicago contract down into the mid 470s. We've been talking about a double top being in play as well as a head and shoulders, and it is almost textbook perfect head and shoulders if we get a breakdown below $5. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.